Okay, I'm going to try this again. Good morning, good morning, good morning. It's me, Kenny Paul Curry, your host of the party, and here I am with my Dunkin' Donuts coffee. Now, I've only had two so far this morning, so excuse me if I'm not my usual riled up self, but trust me, by the time I get through with this, I am going to be riled out. Oh my God, what happened yesterday? What is it that we need to know? And don't think that it was all about Facebook, right? While it caused all the drama, is it really about the metaverse? Absolutely not. Amazon and Snap reported after the bell, after they got crushed yesterday, they reported after the bell, and guess what? They crushed it. And the algos that sold them down yesterday are taking them all up today, making yesterday's action appear thoughtless and overdone. Oil is now trading with a 9 handle. Yes, West Texas Intermediate is trading at $92 a barrel. It's up 98% in 1 year. And what do we have for dinner tonight? We're going to have the Southern Fried Chicken. It's real comfort food, but we'll get to that in a minute. Look, brace yourself for more ridiculous decisions all built around Facebook, because that's what they were, ridiculous decisions. Facebook imploded, right? Taking the whole shebang with it. Everything got dragged lower. They made no difference who you were. And all that reveals is how such a high concentration of mega cap tech stocks can hijack the psyche and the conversation, because Facebook has nothing to do with financials, consumer discretionary, basic materials, real estate, industrials, does it? I mean, come on. Don't go and try to connect the dots and explain the broad weakness in the market vis-a-vis Facebook. It's ridiculous. The broad weakness is a direct result of the angst, think the Fed and monetary policy, that is simmering on the back burner, because what really changed between Wednesday and Thursday other than Facebook's earnings? Absolutely nothing. So is Facebook really the reason to see the Dow give up 520 points or 1.5%? The S&P's lost 112 or 2.5%. The Russell down 40 points or 1.9%. The transport's down 271 or 1.7%. Well, it might be a reason for the NASDAQ to give up some, but they gave up 540 points or 3.8%. Facebook's an individual issue. It's company specific. Has nothing to do with Honeywell, Coke, Halliburton, ExxonMobil, IBM, Colgate. The list goes on. Absolutely nothing to do with those stocks. Because by now you have to know what happened, right? Facebook reported this disastrous quarter, and that's all the algos needed. They switched gears, going from active buyer over the last 4 or 5 days to panic seller, sending Facebook and the other social media names down the drain. Facebook down 26%, Snap down 24%, Twitter down 5%, Pinterest down 10%, while also deciding that it was a risk-off day across the board. Nothing was spared other than consumer staples. Things like Procter & Gamble, Colgate, Johnson & Johnson. The XLP closed up 0.03%, which is a real win when you consider what the rest of the market did, right? Tech down 8.6%. And Facebook isn't even in that ETF, the XLK. Facebook is 18% of the communications ETF, XLC, and they were down 6.9%. Consumer discretionary, XLY, was down 12%. You want to know what's in that ETF? Names like Amazon, which makes up 21% of that ETF, was down 8%. Tesla's 18% of that ETF, down 1.5%. McDonald's down 0.6%. Nike down 2.3%. Home Depot down 2.2%. Lowe's down 2.2%. Starbucks down 2%. Basic Materials down 1.7%. Industrials, XLA, down 1.6%. Financials, XLF, down 1.1%. And why again were all those sectors lower? Because Facebook disappointed? Challenge. Now, I say that because did you see what happened after the bell last night? Amazon reported after the bell, and needless to say, Amazon blew the roof off the house. And suddenly all the sellers from yesterday realized the decision they made to sell Amazon because Facebook disappointed was emotional, ridiculous, and thoughtless. Now, all those people that were buying Amazon yesterday in the height of the panic, good for you. Because while Amazon did lose 8% during the day, it gained 21% in the moments after the closing bell. This morning, Amazon is quoted up $331 or 11%, and likely going higher. Revenues of $137.4 billion in 1 quarter. Operating income of $5.9 billion in 1 quarter. Web services net sales of $17.7 billion. And they're raising the price of the Prime membership by 17% or $20 to $139 a year. And traders and algos can't get enough of it, buying up anything that's for sale in the pre-market. And that's causing the tone of today to be very different from the tone yesterday for Amazon. Snap is also up 59% this morning after they reported their earnings. And guess what? Investors liked what they heard. Had nothing to do with Facebook, but yesterday they kicked the crap out of Snap yesterday. Today, it's all about the NFP report and what is expected to be a disaster. Expectations for plus 150,000 new jobs created is now being replaced with a range of results from minus 400,000 jobs to plus 200. But not to worry. The administration already front ran this, right? They came out on Monday to try and push this report to the end of the line, saying the survey was taken during the height of Omicron, so therefore it's not valid. Okay, whatever. Within this report, look for unemployment to remain at 3.9%, which would make 0 sense if the report is correct. Average hourly wages up 5.2%, which would be up again. And labor force participation rate to remain at 61.9%, which is below the pre-pandemic level of 63%. In any event, and I said this yesterday, I'll say it again, do not expect that this report, no matter which way it goes, good or bad, is going to change any of the thinking at the Fed. And that is why stocks came under pressure yesterday and why they remain under pressure this morning. The reality of 5 rate hikes, supported by voting member Jimmy Bullard, remember on Tuesday, he told us that 5 hikes would be a good bet, wink, wink, and a reduction of the balance sheet is the issue. And again, it's nothing more than a math problem, right? When the Fed fund rate goes from 0 to 1.5%, and the 10-year goes from 1.2 to 2.2%, and the 30-year goes from 2.5% to 4%, all while the economy appears to be slowing, is the issue. Valuations must change, period, the end, especially if those hikes are going to force a recession in 2023 like many expect. And that change suggests that we will see lower valuations, and that will cause stock prices to reprice. How long have we been talking about this? I mean, are you really surprised with any of this volatility? I mean, is any of this confusing to you or surprising you? We've been talking about it for months. This morning, Dow futures are down 150 points. The S&Ps are up 5, Nasdaq's up 65. Makes some sense. And the Russell's down 15 points. Lots of volatility yesterday is going to cause investors to continue to consider what lies ahead. And it's not about Facebook and earnings. It's about the broader central bank policy. Yesterday, we saw the Bank of England raise rates for the second time. And the pressure is now on Christine Lagarde, president of the European Central Bank, to make a move. Why? Because inflation is at multi-decade highs across Europe, the way it is across the United States. The continued confused chatter coming out of the different Fed heads will only add to the volatility. So stop the baloney, make the decision, and run with it. The pain is not going to get any better by stalling or being indecisive. In fact, the pain will only get worse the longer the Fed remains tone deaf. Because that's what it sounds like, right? No one's paying attention and they're causing all this confusion. But look, we do have a midterm election coming up in November, wink, wink, so you have to ask, what role is that election playing in any Fed policy decisions, right? Is the election causing the confused conversation? And while stocks are declining in value, guess what's going up? Oh, bingo, oil. This morning, West Texas Intermediate is trading with a 9 handle. That's right, oil is up. WTI is up 2% or $1.80 at $92 a barrel. Up a stunning 98% since January of 2021 when Joey walked into the White House. The latest move being credited to the winter storm. Okay, you go with that. It's all about demand and supply, period. And the demand destruction story, yeah, not so much. $100 is now clearly in sight, and it's a big round number, one that usually draws investors in just to see it tick there. It's almost like winning the brass ring at the circus. I know it sounds ridiculous, but it is a psychological thing, right? $100 is now only $8 away. European markets are all weaker this morning. Energy stocks are up after the UK allowed for the energy price cap to rise by 54%, meaning that UK households are going to see their annual heating bills go up by about $1,000. As I already told you, the Bank of England did raise rates yesterday for the second time, and that's putting pressure on the ECB to do something. All while Christine Lagarde said that she does expect inflation to remain elevated for longer, so it's not transitory, but she expects it to ease by the end of 2022. Maybe she wants to rethink that, right? U.S. inflation is not expected to ease until at least mid-2023. And while the U.S. is not the Eurozone, inflation is the same no matter where it breeds. End of 2022, not happening, Christine. Not happening. At 7:30, all markets across the Eurozone region are down between 1 and 1.2%. This morning, Bitcoin's trading a little bit lower. Bitcoin's trading a little bit higher at 37,000, and Ethereum is trading at 2,800. The S&P closed last night at 44.77, down 111 points, after attempting to kiss trendline resistance at 46.22 only 2 days ago. 44.42 is the 200-day moving average, and that is only 30 points from where we are. And that's going to be a key level to watch. Now, if we pierce it, I would then expect us to test the lows of January 24th, which is 42.22. I've been saying this since it happened 2 weeks ago, and I am still in that camp. So buyer beware, get ready for more volatility. Okay, so what do we have for dinner tonight? So you need something something that gives you comfort, right? And Southern fried chicken is one of those great dishes, right? And who doesn't love Southern fried chicken? I always find it a source to be comfortable in very much an uncomfortable time, and it's easy. You eat it with coleslaw and mashed potatoes. That's it, right? So for this, you need the chicken pieces, and I like thighs, so I use thighs, but you can use the breast and the legs, obviously, but I like the thighs. You need 1.5 cups of evaporated milk, 2 large eggs, about 2.5 cups of flour, salt and pepper. Some people also add cayenne pepper and hot red pepper here. You can do that. You need garlic powder and 4 cups of vegetable oil or Crisco, right? Crisco is really the secret. Crisco is really amazing. Next, you need to rinse the chicken pieces. Just rinse them, put them on paper towels, pat them dry, set them aside. In a bowl, mix the milk, the eggs, right? And if you're using hot red pepper sauce, you can add it here also. Whisk it until it's all blended together, the milk and the eggs and the red pepper sauce, right? Now, combine in a paper bag, combine the flour, the salt and pepper, the garlic powder, put that all in a paper bag, shake it all up so it all mixes real nicely. Now, take 2 or 3 chicken pieces, put it in the milk, let it soak a little bit, lift it out, and let the excess milk just drain off of it, right? Now take those chicken pieces and put them in the brown paper bag. Fold the top and shake them up like shake and bake, right? Because you want them to be coated with all the flour on it, right? Then take them out, remove them, put them on the plate, and repeat with the remaining pieces of chicken. Now, here's where you have to be careful. You got to heat the oil in your really heavy-duty pot to about 350 degrees. And when it's ready, you got to fry the chicken a bit at a time. If you put too much in, it draws the heat out. So don't make that mistake. The breast will cook a bit faster. They cook in about 10 minutes. The thighs and the legs usually take about 12 to 15 minutes. You want to make sure that the juices run clear when you pierce it with a fork. When they do, remove them from the pot and place them on a plate lined with paper towels to drain. You want to serve this immediately with coleslaw, a large mixed salad maybe mashed potatoes or garlic mashed potatoes, anything that's going to make you feel comfortable. It's a great dish, and it's one to make like on a Saturday, even a Sunday afternoon. Maybe you don't want to make it, when you come home from work at 6 o'clock at night on a weekday, but make it on the weekend because you prepare it earlier in the day and get it ready like 4 o'clock in the afternoon instead of trying to do it at 7 or 6 o'clock at night. In any event, listen, you can see the sun is out behind me. It's a very bright day here in South Florida. It's going to be a beautiful weekend, and I'm looking forward to just relaxing a tiny little bit. In any event, take good care, and I'll see you on Monday.